Everyone has heard this advice. Start an SIP early, stay consistent, and you will be financially free. Your bank says it, finance influencers say it, maybe your friends say it too. None of them were lying for their benefit. Some even genuinely believed their advice was right. But here is what none of them ever really told you. An SIP is not going to change your life. It will not make you rich. Your 1000 rupees SIP turning into 1 crore rupees after 30 years is a huge scam. Let's discuss it with data today. And don't worry, I won't leave you just by that discussion. By the end of the video, I will also tell you how to solve this issue and the secret solutions to actually becoming rich. So if that's the case, what are you waiting for? This is Ajay Ajit. Welcome to Market Feed. There are two hidden factors investors miss when they're making their long-term investing plans. They're blinded by all the invest 1000 rupees and become a crorepati headlines. So let's go ahead and learn what those two factors are and how it will affect your investments using a simple Excel sheet. This is a simple SIP wealth calculator that I've built. But there are a lot more rows that I've hidden that you won't be able to see right now, but I'll be revealing those step by step. So let's go ahead and get started. So as you can see, the section 1 which is visible to us right now is our SIP inputs. So let's give an example here. 10,000 rupees monthly SIP, expecting an annual return of 12% for 20 years with a 10% step up. Now the question is, what will be your returns in this case? You can open any SIP calculator across the whole internet and you'll be seeing the results that I'm about to show you. But there are more sections about to come. So let's go ahead and see what is in section 2. Section 2 is revealing what your SIP will turn out to be. Your monthly 10,000 rupees SIP in 20 years, it will make you more than a crorepati. It will make you 1.85 crore rupees. Wow, that sounds nice. But here is the two factors that a lot of people don't tell you, and that's where we'll get to section 3 and section 4. Let's go ahead. So what are those two factors? Annual inflation and long-term capital gains tax. These are the two biggest factors that a lot of investors miss when they're making their investment plans. So let's go ahead and see what is the impact of these two factors in our investment journey. Even though you might see headlines that India's inflation is at 2 or 3%, the real inflation, in my opinion, is more than 6%. You can confirm that by seeing the rupee depreciation numbers over the last multiple years. So I'm going to give an expected annual inflation of 6% here. Long-term capital gains, as of today, it is 12.5%. So this long-term capital gains, it did not even exist a few years ago. And after that, the government introduced a 10% tax on profits. But now it is more than 12.5% of profits. Who knows if they'll increase it further? So I've given it as a modifiable cell in this Excel sheet that all of you can download. So let's go ahead and understand the further cells. So inflation factor here is how much the cost of goods and services will go up over the next 20 years of your investment. So here inflation factor is 3.21x. That means if a good or a service costs 10,000 rupees today, after 20 years, it will cost 32,100 rupees. What does it mean? The time value of your money sitting in your investments or your bank account or even your mutual funds, it's slowly reducing with time. So in our example case, even though your total wealth created was 1.85 crore rupees, the real value of wealth is only 57.71 lakh rupees. And you set a target of 5 crore rupees or 10 crore rupees in your SIP calculator. What would have happened if you got that calculation wrong by such a huge magnitude? And this is only 20 years. Let's say I go ahead and change this to 30 years. The inflation factor goes up even more. You can see 5.74x is the inflation factor now. So your calculations would have been all over the place. So the real value of wealth in our first example here is 57.71 lakh rupees, not the 1.85 crore. But it is not yet over. There is also one more section which is a long-term capital gains. Now let's come to the section 4, which is adjusting for long-term capital gains. So I've made a simple calculation here. The long-term capital gains today is at 12.5%. You can adjust it if it increases or decreases. And there is also a standard exemption limit of 1.25 lakhs that the government gives. But no need to worry about all of that or the jargons. Just understand that at the end of the time frame, at the end of 20 years, if you want to withdraw that money, you'll have to pay a tax to the government of 14.38 lakhs from your profits. So that will bring down your corpus even further. That will bring it down to 1.7 crores if it was from the initial investment. But after doing all of the calculations, that is including inflation and including the LTCG tax percentage, you can see your 1.85 crores after 20 years will have a real value of only 53.22 lakh rupees. So you identified the two hidden reasons with which your investment is not letting you become rich. So how do we solve this problem? Before we get into that, I want to share few of my thoughts around this. India's savings rate today is lower than ever before, and I'll give you the real reason why. For our parents and our previous generations, they did not have a lot of areas to spend their money. But something changed post the 1990 globalization year. After the economy opened up, we are having more and more cheap goods to buy. At the same time, cost of assets have also increased by quite a lot. A normal person is not able to buy land or a lot of gold easily, but they're able to spend more easily on mobile phones, TVs, and gadgets. They're cheaper than ever, even with inflation. Goods are getting cheap and assets are getting expensive. My father bought a Wagner in 2001 for 5 lakh rupees. Even today, a Wagoner's cost is only 5 to 6 lakh rupees. With this thought, people think that accumulating wealth is hard and start accumulating only goods. And when this happens, people end up spending a lot of what they earn. They end up having no emergency buffer, let it be for a medical bill, a job loss, a family situation, nothing. And this is where life quietly backfires on you. Some still manage to invest because they've heard of the word SIP somewhere around the internet. They've heard finance influencers talk about it. They've heard their friends talk about it. And they've started their investment journey. But without solving the underlying issue, which is you'll not be able to achieve the goal of becoming rich and changing your life. So what I want you to understand is that a small SIP is not a wealth building tool. It is a wealth preservation habit at best, and it's a good financial habit to have in your lifestyle. It will keep you in the same financial category that you're already in. It will not move you up the ladder. Nobody jumps a wealth bracket on a 3000 rupees SIP. But the SIP is not the problem, the size of it is. So how to solve that? Let's discuss by going back to the Excel sheet. So in our first calculation, what was our expectation? If you invest 10,000 rupees for 20 years, you'll be having a corpus of 1.85 CR. And were you happy with that objective or were you happy with that goal? If yes, then that is a goal that we have to really achieve. 1.85 crores after 20 years. Let's see what the real value is. So I'll come to the next tab, which is a goal backtracker tab. So here in my financial goal for today, I've written 1.85 crore rupees and I've given all the same inputs. Years to reach the goal, 20 years, expected annual return 12%, annual step up 10%, expected annual inflation 6%. So this calculator is now telling me my real target should not be 1.85 crores. It should be 5.93 crores. Again, you can enter any value that you want and you think is relevant for your own life. That's why I'm sharing this entire calculator with you in the description and in the pinned comment. But here, if I want to reach this goal and if I already calculate the long-term capital gains that I'm going to pay, you can see that the required monthly SIP was not 10,000 rupees. It is going to be 35,224 rupees. And if you want to invest without a step up, no step up at all in your life, you can see that 65,904 rupees will have to be invested every single month in order for you to achieve your goal. In this case, I want you also to understand what each of these cells mean and play around with this Excel sheet. So annual step up is when you increase your SIP every single year. If you're doing an SIP of 35,000, how long can you keep increasing it by 10% every single year? Not so long if I'm right. because the next year it will be 38,000. The year after that it will be nearly 42,000. The year after that it will be 47,000 rupees. So it will keep on increasing at an astronomical scale. So you might have to come here, adjust the annual step up numbers. If you're looking at the expected annual return, I've given something realistic here, 12%, which is including gold in your portfolio, small cap, mid cap, and every other asset. I've not given it 15% or 16% returns because you'll have to have a certain portion of debt, safe assets in your portfolio, which only give you 8%, 9% maximum. So after having a mix of everything, you might only have a realistic return of 12%. If you're more conservative, you can give a lesser number here also. So hope you understood the first solution. It is to reverse engineer your goal. Using this goal backtracker tab, you can do that yourself. So it's going to be very, very easy. But let's come to the second solution, which is going to be a bitter truth for a lot of you, which is the only real solution in these matters is to scale your income. So you saw that a 10,000 rupees SIP will not help you to reach your goal. You'll have to at least put a 35,000 rupees SIP even with a 10% step up. But do you think that a person who was only doing a 10,000 rupee SIP can do a 35,000 rupees SIP today? Probably not. That's the reality. So what you'll have to do is you'll have to scale your income accordingly. You'll have to find additional sources of income, or you'll have to just plain excel at what you're doing. If it's a business, do really good at that. If it's a job, be really good at that and try to scale your income. And by doing that, along with being financially disciplined, I'm sure that all of you can reach your goals. And here I want to propose a third secret solution that I want all of you to follow, which will help you definitely reach your goals much more easily and with much more peace of mind. And my personal favorite solution, which I'll suggest to a lot of you, is to set a more realistic goal which you think is more achievable. So do not aim for that 5 crore at one go. Do not aim for that 10 crore at one go. Set a target of 5 lakhs at first. Then set a target of 10 lakhs at first. I've made a detailed video about this concept, about how this entire investment perspective of yours will change when you start keeping realistic, smaller goals in your life. It will not just change your outlook towards investing, it'll also make you much more peaceful and happier in your life. Isn't that what all of us want? I'm not saying all of the solutions here are easy, especially the one where you have to increase your income. You'll have to do a lot of things. You'll have to find an additional income, a freelance income. You'll have to increase or excel at your job to increase your salary. So a lot of things will have to fall into place in order for all of that to happen. But I feel the third solution is going to be achievable for all of you. And that's what you must start doing today. If you have not seen that video, I'll put it here in the I button. That's all for today. This is Ajay signing off. See you all. Bye bye. So an additional bonus part for the video for all of the regular marketfeed family. So over the last few weeks, you might have seen that the video posting schedule was a bit all over the place. It was because yours truly was getting married. Going ahead, you can see a lot more valuable videos and amazing concepts in this channel. And if you're not yet subscribed, make sure you go ahead and do that. And these rules which I'm sharing with all of you, these are some that have personally helped me in my own financial journey, hoping that they will help all of you as well. That's all for today. This is Ajay signing off. See you all. Bye bye.